Ever wonder how much money real estate investors actually make? The answer might surprise you. In this video, I'm going to break down how much real estate investors make, what factors influence their earnings, and how you can maximize your profits. So let's get started. What's the income spectrum for real estate investors look like? And I don't want to sound like a lawyer, but the answer is really depends. Depends what you do. Are you part-time, full-time? Are you in residential, commercial? Are you flipping? Are you holding? It's the spectrum is wide is all I want to start out with. But the range, beginners, you could, if you're your first deal and it goes south, you could potentially lose money on a deal. However, starting out and you find a flip, we've shown a bunch of our flips here that we've done. Most of them have light rehab to minimal rehab that we buy from banks. And you could easily make 10 to 50K in a few months, just a quick flip is one example. The longer you do it and it becomes more and more of a business, just on the flipping side and the how many rentals you have, you're talking 7 figures a year. You go on the commercial, larger scale, it could be 7, 8 figures. However, some of those deals also could bankrupt people. The range is wide, and it depends on, what treating it like a business or kind of like a part-time investment is going to be the wide discrepancy. And what a lot of people also don't realize too is if you're going to be an actual operator versus an investor, right? You can earn money just, be a lender on some of these smaller projects and earn a nice interest rate return or sharing the profits. So there's no one number to really narrow down what a new real estate investor could make. But yeah, Paul, anything to add there?
Yeah, I mean, it really depends on how much you want to go. If you got a full-time job and you want to do this part-time, which is definitely what we'd recommend you getting into at first, doing it that way, you could do 2 flips in a year and make, 25K on each, and that's 50K. That's pretty good side hustle right there, right? That's pretty good amount of money you're making there on the side. You can also hit on one and make 70 or 80. You can also lose 20 on some. So I would say that $50,000 number is pretty good. If you do one a quarter too, let's say you did one a quarter, then you're looking at potentially, 20 grand profit on each of those, 80 grand a year. That's part-time. And we talked about the full-time, right? If you're doing this full-time and you're doing 10, 20, 30 deals a year, you're going to be $250,000 probably plus on that if you're doing it right.
Yeah.
Yeah. Looking at our numbers with what we do, we're in that category where we're plus that, and we could do a heck of a lot more if we wanted to. We've looked at doing some of the commercial stuff. We've seen some of the risk. We've kind of gotten away from some of that, but we're still looking at it as those numbers continue to fall on the commercial side, that there might be opportunity there.
Yeah. And another way to think of it too is a lot of people talk about, a BRRRR method to start out where you buy, renovate, and refinance out. But you do all that work, that's more of like a longer term strategy. You're making probably a few $100 a month doing that strategy, right? So you're not quitting your day job immediately doing that, but that's a longer term play. And then you fast forward a few years, you buy a few of them a year. Next thing you know, you're got a lot of the cash flow. You might be able to pay down some of the debt too. Home appreciation is going to rise. You could tap into those properties from home equity, and it kind of like snowballs over time, essentially. So there's to me, real estate is a long-term game, especially on the rental side like that.
Yeah, that's the get rich slowly method, right? And it's probably the best method, most proven method in real estate. If you just buy and hold things over time, you're going to do better probably than anybody else, right? And you're not in that rat race of constantly chasing the next deal that wholesalers are, flippers are.
Yep.
So and you want to find that nice blend though, too. You might want to do both, do the flips, and then you have the rentals, which offset some of that income with cost segregation, which allows you accelerated depreciation, more write-off on your properties, more write-off on your profits for your short-term flips. So a nice little balance is probably the best way to do it.
So take it a step further now, like what some factors influencing income? And the first one is going to be your investment strategy. We kind of touched on this high level earlier, but flipping houses, that has the short-term wins. That's not a repeatable. Once you get paid on a deal, you're done, right? So you really have to build a business where you have systems in place that kind of constantly get deal flow due to renovations or just, minor renovations and resell them as is quickly. But again, on property, you could go anywhere from 20 to 100K plus if you're in the high end markets. That's short-term play, right? Because like once you turn it off, it's gone, the money. Whereas the rental properties now, You're not going to get as much money up front, but that's going to be steady income through cash flows over time as you accumulate wealth and pay down debt. And then that's just on the residential side. And then there's a whole commercial real estate where there's different asset classes, from data centers to multifamily to retail to medical to everything else in between. Those are $1 million projects, a lot of them. You could get smaller apartment buildings for less than that, obviously, or in self-storage facilities. But most of them are, you're going to get larger profits, but you get huge swings and success because of a lot of that capital up front that's needed. And another thing is, what's your market locations? If you're in high demand cities, Paul, one of the beautiful things for us, we're national, right? We buy all over the country. So we just, all right, it's tight in this market. It's too much demand. I could go to another city now, right? And find deals there. So it's going to vary by market. And at the time of the recording of this video too, is on a national basis, everything's good. Demand, supply is rising, but it's not meeting demand needs yet. Prices are increasing. But if you go into certain markets like Florida right now, they're getting crushed with high inventory. So it varies. Real estate's old adage, just local. It's totally true. I got to understand what the demand supply is in each city and where the trends are going. Because, if you see supply really increasing and then you buy a flip now, what's that going to look 6-12 months from now? You could take a huge haircut on a property sitting a very long time versus the other way around. If there's demands continue to grow, but supply is not there, you get something now, you're going to sell it quickly with a lot of offers in place. And then other things are around there is just, different levels of experience. As you become a seasoned investors, you're going to find better ways just to find deals. It's just practice makes perfect, essentially. And as your network grows too, you're going to have people sending you deals, different agents that you work with that might want to get on a flip. Then obviously, investors with access to more capital and financing as they become more seasoned, because people want to get a piece of the action and make some money on your real estate deals. Anything I missed there, Paul, on factors influencing income?
Yeah, I mean, maybe the biggest factor influencing income, if you're not buying bank-owned properties, you're off the MLS, is how much you invest into marketing, right? How big of a team you want. You kind of touch on that a little bit. Reinvesting in yourself, you're saying maybe putting $5,000 a month into your marketing in whatever markets you're in, and then you need an acquisition manager, and then you need a disposition manager to handle those things. So it really depends on how big of a team you want to make. That's going to influence how much you end up making. And the bigger the team, the more risk you have too, right? We talked about this, Mike. We have a smaller team. We like to keep it small and more controlled, and we can shift and navigate really quickly if we need to. If you have a lot of people dependent upon you, it gets much more difficult to do that. So keep that in mind as you're growing. Grow at a slow and steady pace. Don't try to grow really big, really quickly.
Okay. Yeah, perfect points there. You want to cover kind of the next topic here on how to increase your earnings, Paul?
Yeah, I mean, the biggest way, this is what we did, Mike. We made this shift this year, right, where we changed our ARV, what we're looking at, how much will go in our maximum allowable offer, right? We shifted down from 70 to 65%. We increased our holding time. We increased other costs just to offset anything that we have, like you said, in these inventory markets or markets where there's more inventory. Obviously we're going to hold them longer there. So that has been a great shift that we did, which has increased our income. And yes, we may get less deals with this, but we're getting better returns on it. So quality of life right there. Should do better overall though, and reduce risk of losses dramatically, which since we've made this shift, we have been golden. Yeah, and we'll continue to keep a look at what markets we're going to be in too, right? Because there's markets we're looking at, oh my goodness, there's so much inventory here. We don't really want to be there because we have so much competition. Unless you get a deal that's so much cheaper than everybody else's, it's just not worth going into.
Yeah. And then last thing to add there is just to continue to educate yourself, right? Paul's been an investor for 25 plus years. He still goes to real estate mastermind groups, networks with others just to get a pulse on the market, and then really know where it's heading and where it's going so we can make the best possible decisions on our properties.
Yeah, key, go to your RIA all the time, right? Because you can get more information there too. You have speakers that come from different parts of the country, these meetup groups, and you're going to get a lot of good information here. And keep educating yourself, keep learning more out there of what's going on in the market. Mike and I use Altos Research. We look at Redfin. We look at a lot of different data out there, Adam, to see what's going on in the foreclosure space. Make sure you stay educated, stay on top of things so you don't fall behind.
Yeah. Next topic here is just some challenges that impact earnings. And, one is, market fluctuations. Economic downturns could happen quickly or unexpected, and the local market could change on a dime. And we've seen a lot last year happening where we're at in different markets where we actually added a new filter to mitigate that going forward. With the bank property, you got sometimes 30. If it's HUD, they could delay the closing another 30 days, and a lot could happen in that time period. So one last thing to do before you buy a house is check, like, is the market all of a sudden flooded overnight with actives? Is a way to manage that. And then hitting costs. People don't, you see these shows on TVs on what they made, but there's never like maintenance, taxes, unexpected repairs that can reduce your overall net profit on a flip or even on a long-term hold, right? Things break all the time. That's going to eat into your cash flow. That's great if your rent covers your mortgage, principal, and interest. However, stuff breaks sometimes, and you got to account for that as well, like a reserve or someone leaving your property. And then also, what are your different time investments out there, right? You got to find these deals, you got to negotiate, you got to manage the rehabs. And for new investors, those are all new things and are going to take a lot longer than someone like Paul kind of handling it. So you'll learn over time, but those are just some, challenges that could impact your earnings, especially upfront in your real estate career. And then let's end with this question, kind of, Paul, that we get is real estate investing right for you, right? That's a $1 million question for a lot of people. And how would you answer that?
Yeah, that's a tough one, right? I mean, it's got to be something you love. If you don't enjoy real estate, I would not recommend getting into it. If you don't enjoy dealing with people and managing rentals, I would get away from rentals and maybe stick with the flips. It's super important to love what you do. That way you'll be good at it. If you don't enjoy it, find something that you do enjoy for sure. But no, I personally, Mike and I love real estate. We realize that 90% of the world's millionaires have become millionaires through real estate. So it's also the most tax advantaged asset class out there. There's so many great things about real estate. There's so many different types. You might not like residential, but might like light industrial, self-storage facilities like Mike mentioned earlier. There's a lot of different things you get into. Retail, there's so many different avenues that you can look at. And so the sky's the limit. But if you don't enjoy real estate, just don't go there. But if you do enjoy it, like Mike and I enjoy it, there's a lot of different things you could do and really, really find true satisfaction from it.
Yeah, you basically got to figure out and ask yourself the question, watching this video, it's, what are you looking for? Are you looking for cash flow, long-term appreciation, quick profits? You got to figure out what your goals are. And some people realize, like, hey, I actually don't want to operate real estate. I just want to be a lender in it. Yeah. Right? That's okay too. It's just a different way to make money in real estate. You don't have to deal with all those headaches, but you're betting on the success of a project of someone else for your returns. So again, you got to figure out what's best for you, like Paul said. And basically, to end the call here is like, being a real estate investor and how much money you make is really going to depend on your strategy, location, experience, and effort. But remember, there's plenty of potential there. There's plenty of ways to make real estate and money in real estate. So, take a look at this channel for more videos and different ideas out there. And then if you're ready to learn more about real estate investing, hit that like button, subscribe, and check out more of our videos on our platform here.